break down. So we really have to have a big week this week of mapping out, if this happens, then I plan to do this. And I'm actually going to make an argument today for whether or not it is a smart week to be a swing trader, or if it's a smart week to kind of step aside and let the chaos unfold. And then once that happens, kind of line up and pick up the easier trades. We're going to map it out. I'm actually going to walk you through the entire newsletter that I created for our private community today, because I want to give you a head start on the week. There's a lot of stuff going on this week. And more importantly, you have to remember why you opened up a trading account in the first place. And that's really what we're going to discuss in a big way today. The distinction between the market's open, I have an account and I can't wait to do something, versus the market's open, I have an account and there's actually something good to do, because putting your money in harm's way is the smart thing to do if the conditions warrant doing that. So today we're going to discuss whether or not this week is a smart week to be a swing trader. Should you be putting your money in harm's way? Who should not be putting their money in harm's way? And why day traders are going to be in heaven this week. It's going to be a really, really exciting week to be a trader. So stick around. Be right back. Okay, so we're actually going to break everything down. We're going to start out with the big news, the obvious stuff that's going on this week, which is two big things. So we're actually going to break these down. The first thing that we're going to talk about is the CPI data. So now, if you're not familiar with what the CPI data, the consumer price index is basically what has been fueling the market rally that we've had for the last 7 weeks. So I just really want to point this out on a chart for you and really just give you some kind of context for how significant this is. So you can see we're actually in a pretty decent decline from April through middle of October. And then this day right here was the first sign that inflation is starting to cool, or that it was starting to cool, where the GDP data came in just a little bit differently, the CPI data coming in just a little bit differently. And the market interpreted that as a potential reason that the Fed and interest rates were going to cool off a little bit. So that's why we had that rally. So the CPI number and the GDP number are probably two of the biggest ones that we need to pay attention to. So this week, tomorrow, Tuesday, December 13th, the next scheduled CPI report is pre-market, 8:30 in the morning, right? So that means that that's the first part of this week. So we're kind of like building the argument of the way the market is right now. Should we be trading, and which stocks, if we do trade, which ones we should be taking a look at? So that's the first part. So the CPI data is coming out, and a hotter than expected CPI report could sink stocks into the year end. So essentially what that means is that if the reading is higher, where consumer prices are coming in higher than expected, that's going to really make the market and the Fed think twice about whether or not it's going to be 50 basis points or 75 basis points. As of right now, as of this moment, it is roughly an 80% chance that the Fed is going to raise by 50 basis points or half. So basically 0.50. So that's the first part. So the CPI could affect the Fed meeting, which is Tuesday and Wednesday, and they announce on Wednesday. So these are the things that you need to be on top of this week. So obviously, we just mentioned the Fed. Stock futures are higher to start the week with the Fed meeting. So the big thing right now is, has the Fed already made a decision regardless, or is the Fed waiting for the CPI data to come out on Tuesday to add to their conversation on Tuesday and Wednesday about whether it's going to be half or three quarters? Now, here's the interesting thing, and we've actually kind of built this argument last week, is if you remember about a week ago. So let's actually go back over here, and this day specifically right here, and I'm going to kind of zoom this out so we can actually really get the full context. We're talking about right here, okay? This is the last time Jerome Powell spoke. And when Jerome Powell spoke, he basically came out and said, yes, we're okay to a little bit less aggressive on the interest rate hikes. And the market just reacted crazy to that, right? Massive move. I want to say the SPY actually rallied, the S&P 500 rallied 8 to 10 points within a 2-hour period after that happened. And we were very, very clear that that particular day of price action is one that we need to watch like a hawk, because that day created something new. It created a new catalyst. Now, we were very clear that this is going to be one of two things in the market. It's going to mark the exact top in the market for this particular rally, or it's going to cause a rocket ship to the upside because they're going to slow down. That's what everybody wanted to hear, and things will kind of start to get back to normal. But let's think about the big picture, and let's think about how long it takes for that to happen. Macroeconomic type stuff. And I know that's a long word, and I don't like to say that, like, to keep things as simple as possible, right? It basically means that the effect of the interest rate hikes will take a long time to feel their way into the economy. Now, I don't know about you, but when I go out to lunch with my wife, it's not, $15 for two people to eat lunch anymore. It's closer to 40, and we don't do it that often because it's a little bit ridiculous. So the effect of that rally was a little bit exaggerated because it hasn't worked its way into the system yet. So here's what I want to do. I want to walk you through first that day's price action, and then we're going to get into the newsletter. Okay. So if we go back into that price action, the big thing that we were looking at was where it started and where it happened, and can we get out of that window? To the upside, obviously, that would have been just absolutely amazing and a great way to finish the year. But within a very short period of time, we've actually gotten below that level, and that buying pressure is no longer there. So we have a massive amount of things going on this week. I do not think there's even a remote chance that there's going to be 2.5, a 0.25. It's either going to be 3/4 or 50 cents or 50 basis points, right? So now here's the thing that we have to think through. Let's remember why we choose to take trades in the first place. We choose to put our money in harm's way because there's a really good chance it's going to move in the direction that we believe. Now, with everything we just mentioned, there's a lot going on this week. Can you go into this week saying, yeah, there's a really good chance I think it's going to move in that direction? I got to be honest with you, with all my experience that I have right now, I am going to be much lighter on swing trades until after the Fed announcement and be a lot more aggressive on short-term trades because the short-term volatility is going to be fantastic. So really what we're talking about right now is accepting overnight risk. Okay, that's the big thing we want to talk about. So I want to break this down now and get into first mapping out where we are in the big picture. So this is actually how last week ended. So you can see the week was pretty horrible, and you can actually see that Friday, while we closed on the lows, a little bit neutral. But this is really the big thing we want to pay attention to here. And I'm going to zoom this in a little bit so you can see it. And it really comes down to we are weakening. We went from strong to neutral to giving it a shot. And mostly these greens were when Powell made the announcement. And now we're heading into here. Now, the big thing to keep an eye on, if we kind of map this out a little bit further, is right here. Okay, we have this uptrend. We have a break of the uptrend. So this is really what we need to look at right now. What we call in my community and the way we do things is there's something called a PCOT. And PCOT stands for potential change of trend. And right now, the S&P 500 has gone into a potential change of trend where that 7-week move to the upside was broken. But as soon as it breaks, that's not enough. We need to validate that move. And I'm going to give you a really good example in probably the stock that I personally have traded the most over the next 6 weeks that has actually broken the uptrend, as well as the energy stock. So I'm going to actually show you that. So for the S&P 500 to confirm a new move to the downside where this rally would be considered over, we need to get below this 392 level. So what I want you to do this week right now is write down 392 is a very significant level that the stock market bulls need to defend this week. So again, we have CPI tomorrow. We might be able to blast through there tomorrow. We might be able to hold that bid tomorrow, but that's the first level. Remember, order flow and tape reading is what we do. We're not chart reading. There's a billion people who understand how to read charts and technical analysis. Technical analysis is not trading. What we're talking about now is setting up parameters so that you can trade with conviction. You're basically saying, if this happens, then I plan to do this, which is very different than saying, hey, I see a bull flag. That's not trading. Chart reading is looking at patterns. Trading is going to get money. That's what we're concerned about right here. So 392. So I want to give you an example now in a stock that we've been trading quite a bit, me personally, actually, and you can see the change of trend here in General Electric. So General Electric on the weekly chart has just been absolutely on fire. If you're a regular viewer of the channel, we've been talking about this pretty much every day. But then at this point over here, We actually broke the uptrend right there. Now, once a stock breaks the uptrend, you have to learn how to work the chart. You're going to let it move the distance it does once it breaks. And now you have two levels. You have the level it went down to after it broke, and you have the previous high. So now what's kind of cool is you can actually see how long this trend has been going on. So only one of two things can happen at this point. It breaks back to the upside, validating that this trend is still in place, or we break to the downside, establishing a new trend. And that's actually exactly what happened in General Electric, and quite honestly, what actually happened in a lot of the large cap energy stocks, which are really dragging the bottom of the list right now. And if we even add a little bit more juice to this, you can actually see that Chevron, and even more so, Exxon, is now 4 closes below the all-important 50-period moving average. So that's just kind of building the framework of where we are heading into this week. Now, I want to really give you something to think about really deeply. You have to remember why we opened a trading account. We have, again, active day trading. We're going to be in heaven this week because there's going to be so much volatility that we're really good. Belly up to the bar is what we talk about inside of our community. Now I want to walk you through what I wrote to everybody this morning. And I'm going to post the link to this newsletter below the video. You can grab it after the video is over if you happen to be watching on the replay. Okay. So we're actually going to break this down. All right. So let me zoom this out just a little bit. On yesterday's swing trade session, I reminded everyone of the type of week that lies ahead and how to trade it. The stock market price action continues to hover inside of a 4-week range. So if we go back into the market, this is essentially what we're talking about right now. So I just want to be super clear about what we're doing right now. What we are setting up right now is the current price action and then what we plan to do this coming week. So we're basically saying, here's what's going on right now. If this happens, then we plan to do this, right? But I'm going to go a little bit deeper and we're going to talk about, should you be trading at all? Okay. All right. So this week, traders may get a catalyst needed to pick a new direction. Stocks will see increased volatility with fresh economic data, CPI report, and the FOMC, as we just talked about. All right. Reminding everyone is important, but how to trade it was the underlying message that we had on our swing trade call yesterday. To put it more bluntly, should you even trade it? Okay, I know that's kind of crazy. We're on YouTube. We're here to talk about it, and we're going to break down some ideas. I have a big list of ideas to talk about today. For day traders, the answer is an obvious yes, right? The expected increase in volatility gives us a chance to bank some nice coin in a short period of time. So that's the day trading side of things. But swing traders have a completely different view. It's virtually assured this week that price action will be anything but smooth. Indecision. Consumer prices, inflations, and interest rates align this week to be the perfect storm of uncertainty. So now I'm giving you some mentoring advice. If we go back to the entire reason that we opened a trading account is because we want to be sure when we put trades on that it's going to move in our direction. At the very least, when I mean sure, we have an edge and there's a good chance it's going to move in our direction. So right now we've already established just on this video that the market's in a 4-week trading range and we have a massive amount of uncertainty about to unfold in this week with the CPI data and earnings. We're going to talk about earnings in a second, as well as the Fed announcement. So we combine those two thought processes, why we opened an account, which is to grow our account when things were certain and we have good odds of things moving in our favor. And we have this week where we're looking at massive uncertainty and the S&P 500 right on the bubble of potentially confirming a new move to the downside. So think about this. We're just talking about, should we be involved? That's the big thing we're trying to get across right now, especially as overnight swing traders. Okay. So consumer prices, inflation. I just want to read this one more time. The perfect storm of uncertainty, which is the opposite of why we choose to accept risk. If there's one thing we don't want with overnight risk is uncertainty. Many of our members can only glance at the market during the day, and there's nothing wrong with that. It's life. But today, Monday, you need to determine if you want to put capital in harm's way ahead of the uncertainty. So here's what ends up happening. And this is always with newer members in our community, always new people are just getting into the market and learning to think and see things in a different way. And by the way, today's the last chance. We actually have a new boot camp starting today. If you want to look at the agenda and see if it's the right fit for you, you can click the link below in the description. So a lot of traders that come into the community, they're like, well, we had that pattern and everything was perfect, but that trade didn't make money. And we're like, yeah, we talked about that on Sunday. We talked about it on Monday, that all of these things were unfolding this week and you had to make a decision. Is it the right time for you to get involved? Here, I got news for you. The market doesn't stop after you make that decision to put a trade on. We have to keep assessing whether or not the trade's still valid. We have to keep assessing whether or not we even want to be in the idea in the first place. So I'm just telling you, like if I was talking to my nephew, Gino, today's my nephew, Gino's birthday, very easy to remember, it's 12/12. I'd say, Gino, you're still learning to trade stocks. I'd sit this week out because it's going to be really volatile and there's going to be a lot of indecision. You might want to wait till Thursday to look for new longer term positions when all that dust settles, and we'll talk about some easier setups. That's what I'd be giving advice to my nephew, Gino. Okay. By the way, happy birthday, Gino. All right. So today, Monday, you need to determine if you want to put capital in harm's way ahead of the uncertainty. Remember why we choose to accept risk. It's because we built a good argument that our initial profit target will get hit versus our stop loss. Ask yourself if you feel that way heading into this week. Be honest with yourself, because your number one job is to protect capital and then find ideas, which we're actually going to walk through right now. If you're reading this swing trading and you're fighting the concept, if you're reading this right now and you're fighting the concept of whether or not you should be trading this week because you want to trade, you have some thinking to do about the reasons you opened a trading account. Now, look, I know this might not be the most popular thing. You're on YouTube watching me right now. And you're like, yeah, let's go find some stocks to trade. But I want to tell you, trading at the highest levels where you see consistency is because you minimize those trades that are not high probability, and you start to keep them in your mind, but not in your trading account. It instantly makes you a better and closer to profitability, if not massively more profitable, because you avoided situations that are not the best. Think about this. I know it's not popular here. Let's talk about some trade ideas. We're going to get to that in a second, but I need to first talk about the conditions. Okay. All right. So here's the last 5 days of price action in the S&P 500. Earnings trades provided some nice follow through. We have actually had some really good earnings trades. Perhaps there's a couple of solid ideas this week. So map these out: Oracle, Adobe, and Lennar. Those are the three big earnings plays that I'm looking at. So this is the last 5 days in the S&P 500. You're like, oh my God, that's great. There's nothing to do. No, not so fast. Let's start to break this down a little bit further. Okay. All right. So now we go from, and I just want to give you an idea. We're working our way through the stock market power pyramid. We just broke down the market. Now we're working our way up through the sectors, and then we're going to work our way into the other stuff. Okay. So sector rotation, as we just talked about, this is the week that just ended, right? Heavy selling into Friday's close spared very few stocks. The only obvious sector is the beating that energy took last week. So if we kind of work our way over into energy and specifically look at the XLE, we now have consecutive days, closes below, and we break that down even a little bit further. Crude oil is continuing to take a beating as well. And I think that's probably the one positive thing about the way things are unfolding right now. I'm sure we all go to the gas station. You've seen those prices come down. I don't know where everybody lives, but Costco is finally below $3 up here. I heard a couple of people in the Midwest that it's in the 250s. Good for you if you got gas prices down in the 250s. So let's continue to find some ideas for the week. All right. So this is the pattern of sector rotation. You can see it was strong, got a little bit neutral, and last week ended weak. Now, this is all heading into the FOMC and the CPI report. A deeper dive into stocks showing relative strength the last 30 days shows a glaring reality. Most of these stocks are names we know. There's no PLTR. There's no Tilray on the list, all right? Traders are sticking with names they know, and people are buying from the companies they need as inflation hovers near 40-year highs. So think about this. Again, going back to the reality of trading right now, what are you buying right now, regardless of how high inflation is? You're buying stuff you need, not necessarily stuff you want. And then we can even throw electric vehicles in there. Rivian actually just announced that they're going to stop producing something that was a big part of what they did. So think about that. That's consumer cyclical. Okay. All right. Traders are sticking with names they know. The following image gives some clues into sector rotation and pockets of opportunity. I'm tracking healthcare, consumer staples for new ideas. So again, think about stuff that you need no matter what. That's going to be the companies that are going to show some relative strength. Stocks that were strong recently, financials and industrials, carried the Dow higher for 7 weeks and appeared to be breaking down. We actually just showed you that in General Electric. But this is the picture that you want to get a hold of. Actually, you know what? I'm going to share this with everybody in the, let me actually open this up for you right now. And I'm going to share this in the chat, and I will post this in the video below so you can actually get a copy of this. So you don't have to take a screenshot of it. You can actually download the link right there. So right there, right? This is now pockets of opportunity. So what we're trying to do right now is we're saying the short term right now is bearish, neutral to bearish, like not really bearish in the big picture because we just showed that we're reversing. Energy's coming down, financials are pulling back. So what we're trying to do right now is we're trying to go out a little bit further to where are the pockets of opportunity of the best stocks to buy now. And then we kind of drill down a little bit more into some very specific setups. I'm actually going to show you two right now on the buy side that I'm looking for. Okay. So we're going to break this down a little bit deeper. Now you can actually see here, technology is strong, but do you really believe that technology is going to carry the way with interest rates going up? No. So we're going to dive a little bit deeper. Healthcare and larger cap healthcare is where I'm looking. It's the largest part of this list. And then over here is consumer staples. So we got Procter & Gamble. Procter & Gamble, as we work our way down, I'm going to show you, is actually one of the top ideas that I have coming into this. Roughly as of right now, initial profit target, not final profit target, initial profit target roughly around $12. So let's continue to break this down and continue to go through the ideas. All right. So we already agreed that financials and industrials are starting to weaken here, but these are the pockets of opportunity that we could be looking for. Now, the big question we get all the time is how do you use this list? Well, there's two things that are massively interesting to consider. Number one, what is your skill level? And number two, what are your resources, right? If I'm pulling 8,000 stocks down and giving you a list of 40, I believe on this list, somewhere around 40, now it's your job to go into this list of stocks and determine two things. Which of these stocks meet your resources? And resources mean skills and risk tolerance and your account size, right? The second part of that is which of them should you completely avoid and not bother? So now you need to just go into this list and say, okay, I'm not going to trade a stock that's $500. That's a little bit too high for me. Maybe I want to trade something that's 50. And then you go and find the stocks. But the second part of that is just because they're in the list doesn't mean that you just go out and trade them the next day. They need to be near an optimal entry where the reward potential makes sense. So remember, if we're getting back to the core of trading, we accept risk because there's a good chance it's going to move in our favor. Now, the second part of that is we choose to accept risk because at the moment we're looking to buy that stock, there's sufficient reward for the risk that we're about to take. Now, a big question we get all the time is initial profit targets. I don't want to put limits on how much I could make. I don't either, and I'm not telling you. We're very careful about using the word initial profit target. Initial profit target is when we set that trade up. We're essentially saying, if I accept X as my risk, what is the minimum profit that I'm willing to accept? And if it gets there, I'm going to put this trade on. But here's the thing. After it gets to that initial profit target, we don't get out. That's very, very important. We shift over into a trailing stop loss methodology, and we see how much is in that trade if it does exactly what we want. It's a very common question that we get. All right. So let's continue to work our way down through the list. So again, you can take that list and work it within your resources. So breaking it down into industrial groups a little bit more. Metals and mining continue to trade into the top three on the bullish side of the tape. So now you're diving a little bit deeper. You're going to go into your software and take a look at metals and miners. Paper products, real estate diversified. These are really more real estate investment trusts. Healthcare and utilities show relative strength last week. So what we're basically saying is even with the selling that happened last week, these industry groups had some relative strength. So again, success leaves clues. If that's where there's existing buying power, we should at least take a look and say, okay, the market might be a little weak right now, but even with the market being weak, where did we see pockets of opportunity? That's called relative strength. Okay, we're going to continue to work our way through the list right now. All right. Solar stocks have a deep pullback, but are technically still bullish. We are actually looking for FSLR to find some bids this week. So we'll take a look at that guy as well. So you can see it's well above the 50-period moving average still. We've had basically around a week of selling, and you can see we're actually bullish already. So we're looking for buyers to step up in FSLR this week. The bearish side is dominated by energy, aluminum, and coal. That's really the bottom side of the list. So if we work our way down, I'm kind of giving you a big bonus this week where there's a whole bunch of other setups that I'm going to give you here. So again, what I do for our private community is I provide this research every single day. And there's a lot more behind it. I just wanted to give you a little bit of glimpse. But more importantly, I wanted to help set you up for this week to give you the right mindset for how you should be thinking about risk this week, how you should be thinking about all of the uncertainty this week, if it's the right week for you to pick a fight with the market, or should you be in cash until it unfolds. If you decide to tackle the market this week, I just wanted to start your week out in a way where I wanted to give you some ideas that make it a little bit easier to find some stock picks this week. Okay. So if we continue to work our way down the list, we have bullish ideas. We have some bearish ideas. Riven obviously had some big news this week. I just want to talk about Coin and Zoom. They're actually on the list as well. You can actually see Zoom is actually right near all-time lows this week. This is a really, really big level between 70 and 60, and obviously below 60 is a big deal. I just want to pull those up for you, and we're actually going to go out to the weekly charts. So we're going to take a look at Zoom, and you can see the trade that we have lined up here between 70 and let's say 60, and you can see it's all-time highs, all-time lows. And we also have Coin. Now, Coin is a little bit different scenario. We all know with the Sam Bankman-Fried debacle at FTX, but we are also resting right on a very, very big level here in Coin. So the two trades here are a little bit different. I am looking to be a short seller of Zoom this week. ZM is the stock. I'm also looking to be a buyer of PG this week with that target that I just outlined on the map for you. Coin is a little bit different. Coin has such a whirlwind of news around it right now. The trade in Coin is still bearish. However, remember we talked about at the beginning of today's session that we talked about if this happens, then I plan to do this. I'm telling you, I plan to be a short seller of Coin because the charts are really ugly right now. Bearish order flow is still sitting there. But, and here's the thing, you got to listen to the whole part of the trade. If it breaks down, I will short it. If immediately after breaking down, it follows through with a continuation day, cool. I'm going to work my trailing stop and continue to move it down. If it breaks down, Coin, C-O-I-N, breaks down and immediately trades into a reversal candle, I'm hitting the road. It didn't follow through, and I'm going to leave it alone. The way that Coin is setting up right now, and let's map this out now. It's Monday, December 12th, early in the morning. There's a very strong likelihood that we could see a short covering rally in Coin this week. So I think Coin volatility is going to be very, very good. If it breaks down, we could collapse, and I'll work my trailing stop loss down. If it breaks down and immediately reverses, buyers stepped in, said this is a value, and those that shorted have to cover that trade to get out of it, and new buyers who are okay with that support will pile on. So there is a potential of a fast rally in Coin this week. Now, that's two sides of the trade, right? So what does that mean? That means that there's going to be a lot of indecision around that big level of $40 in Coin. So let's get back to the whole point of today's trading session. If what I just explained to you means that there's two sides of the coin, no, no pun intended, and that might be a little bit too much to pay attention to, stay away from it. There's nothing wrong with that. I might be talking to a little bit more active traders who can handle that and be at their screen while it's unfolding. The Zoom trade has some pretty good potential. It's already got $10 to the next level. Amazon actually is a potential short sale this week as well. Let's take a look at Amazon. And you can see the last bunch of weeks, we have 2 weeks of consolidating and actually now rolled over again. And if we kind of zoom this out again, this $85 level is a really big level, and we only have a couple of minor supports through there. If Amazon somehow trades below 85, there's a lot of room to the downside below that. So if you happen to be long Amazon, in your mind and in your trading game plan, make sure that you have a plan that 85 is a really big level in Amazon this week. So I just want to scroll back up to that list. You can grab the list. I'll actually put the link below the video over here work our way back up. This is going to be the list. So Oracle actually has earnings this week. And I just really want to highlight what we're talking about when we're saying that the earnings plays have been pretty good. And we're going to shoot on over to here. This is what happened at Walmart after earnings. And we actually have another stock that we're keeping an eye on this week, SE. This is the earnings in SE. And you can see that it's actually kind of holding the bid because the earnings have actually held the bid this week. So there is a ton of stuff to pay attention to this week. So I just want to get back to that one part of the newsletter that I think is really important. And I want to say this as your friend, because this is really the long-term health of your trading account and the long-term positive motivation that we get from being in the stock market and seeing results. We choose to accept risk when there are really good odds that the stock is going to move in the direction that we believe. Never, ever forget that. So now you have to ask yourself, do you believe that's the case this week? If the answer comes back, I'm not sure, or no, there's a lot of stuff going on, then you need to make the smart decision and prioritize protecting your capital until that picture clears up a little bit more. If you want to trade and you can handle the indecision and make good, fast decisions, then I'd work my way up that list that I just gave you in that when you work your way down into sectors and start to take a look at those stocks that have relative strength despite the market showing some weakness. That's the list I'm going to be focusing on this week. So all I'm asking you to do is be smart and be honest with yourself. Ask yourself, with the CPI report coming out this week, with the FOMC announcement coming out this week, with energy stocks breaking down last week, and the market looking almost like right on the bubble of starting a new bearish move lower, ask yourself, is this a smart time for me to be carrying overnight positions? We're not talking about investing. We're talking about you, the swing traders. Ask yourself that and come back with a really honest answer. I think that you might find it might be smarter to just step aside, let all this chaos unfold, and then we'll come back and pick up some easier trades after all of this kind of works its way through the market. All right. A lot of stuff to think about. I'm going to post the link to that newsletter below the video, and I'm going to give you a little bonus. I'm going to also post the link to a spreadsheet starting out this week for some other stuff for you to think about. All right. Thanks so much for joining me today, everybody. If you want to join me in the boot camp and trade with me for the next 2 weeks, click that link below the video. I'd love to see you on the other side. Have an awesome day. If we did a good job, do me a favor, give us a thumbs up and hit that subscribe button. Have an awesome day, everybody. I want you to know how much I appreciate you being here with me.